It's coming up to 12 months since a temporary ban was placed on the export of cattle to Indonesia. The financial impact is still being felt across the north, and that is currently being played out in top-secret compensation talks between those who lost a lot of money because of the ban and the federal government. But Luke Bowen from the Northern Territory Cattlemen's Association says the damage done is far greater than just monetary. He claims the ban insulted Indonesia and set back its relationship with Australia.
We have to be realistic. Last year was an incredible shock for our relationship with Indonesia. And only yesterday, the Indonesian ambassador to Australia was here in Darwin and in a very polite sort of way indicated that those feelings are still quite raw. I think it was done very badly by the Australian government to our own industry here, but also particularly to the government and the industry in Indonesia. And I think we've got a long way to go to rebuild that relationship. And after all, this is a country of 240 plus million people, the world's largest Muslim country and the third largest democracy in the world, and is right on our doorstep. And their future and our future are intrinsically tied together. And trade is a very important part of that relationship. And I think we still have got a long way to go to rebuild some of those relationships.
Meanwhile, the live trade struggles with quotas and weights, and now it's time to muster. Life certainly isn't easy for northern producers at present. Steer and heifer prices remain steady on last week. The quota for the next quarter will be the game breaker. At the sale yards last week, widespread rain in the east saw numbers on offer fall. Nationally, yardings were down 10%, but in Queensland the drop was 34%, although it's worth noting that at the moment an unusually large number of cattle are going direct to processors. So the indicators went up. Japox recovered most of recent losses. A diving dollar would have helped, while cow demand appears to have not suffered at all from that E. coli scare in America. Lamb numbers were firm while sheep numbers went up as producers noted the good returns. Restockers were active on the back of that rain in the east. Checking grains, the market stabilised last week after the big fizz of the previous week. Locally, producers can now focus on getting their crop in the ground. ASX futures held up reasonably well, possibly due to some unease about weather in WA, while East Coast wheat was relatively steady. Overseas trading saw markets fall, and this was despite ongoing weather concerns in America, the Middle East and Russia. The stronger American dollar didn't help either, and there was a further cut in the estimate of world wheat stocks. So maybe there's some upside to come. Once again, weather, or more correctly rainfall, will be the key. Local spot prices retreated. Rain in the east has certainly lifted confidence among grain growers. Cotton and sugar prices continue to weaken. Cotton is now dumped 20% in the past month. Analysts say it's all about economic fears from Europe, while sugar decline is based on world production going up. And there's another issue of concern. Brazil is the world's largest sugar producer, and their currency is depreciating at a rapid rate. So cotton slipped more than 2 cents and sugar edged down a fraction, but that's the direction it's been sliding for several weeks now. Finally, to wool, with the ongoing bad economic news overseas and top of poor domestic retail figures combined to push the wool indices further south. There was some good news. A bale of 12.3 micron wool from the wool factory at Horsham sold for 11,700 cents a kilo. That seems a bargain relative to previous ultrafine prices. Now, at the close of auctions, the Eastern Market Indicator was down just over 0.5% on last week to close at 1,096 cents a kilo. And that's the Landline check on prices.